Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it looks like we may be headed to war with Iran. Now, we're not officially at war yet, but after the events of the past 24 hours, the risks of such a conflict escalating in rapid order has risen dramatically. And just as a quick recap, over the weekend on Sunday, President Donald Trump ordered airstrikes against Houthi positions in the country of Yemen. And then he posted a message on Truth Social today. I'm not going to read the whole message to you. I'll put it up on the screen so you can pause the video and read that if you want to. But the last line of it is sufficient to read here, I think, and it's pretty ominous. It says, "Every shot fired by the Houthis will be looked upon from this point forward as being a shot fired from the weapons and leadership of Iran. And Iran will be held responsible and suffer the consequences, and those consequences will be dire." So I really don't think that that statement leaves too much open for interpretation. Again, we're not at war yet, but we could be at any moment, and this could have a huge impact on the global economy and also on the gold and the silver market, especially physical gold and silver bullion. So in this video, I'm going to give you my forecast of what some of the biggest impacts could be if we do end up going to war with Iran. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers get gold or silver at spot by visiting sdbullion.com/new. Hey, as a quick reminder, don't forget you can sign up for my free e-newsletter with the link down in the description, and with market developments coming in hot and heavy, that's going to be one of the best and fastest ways for me to keep all of you updated with developments in the gold and silver market. So sign up today, it's completely free. Okay, so one of the first major impacts that we could witness as a result of a war breaking out with Iran would be in the paper markets, in the stock markets. And stock markets in the US have been in a corrective phase for several weeks now. And over the weekend, Treasury Secretary Scott Bessent told Meet the Press that stock market corrections are normal and that what is not healthy is euphoric markets that go straight up. So this comment already has ignited a significant new wave of uncertainty as to the administration's commitment to keeping the stock market bubble inflated, and a war could easily be the pin that pops this bubble. So barring any major relief in the form of emergency rate cuts or renewed quantitative easing, which I wouldn't necessarily rule out in the event of a market correction, we could see a lot of red in the US stock markets on any news of a confirmed escalation with Iran. Now, one of the reasons that we may not see that intervention in the form of more liquidity injections from the Federal Reserve, unless, of course, the pain gets really severe, is that a war with Iran would likely drive the price of crude oil through the roof. Iran, one of their first moves will probably be to shut down the Strait of Hormuz, through which something like 20% of world petroleum production flows. It's about 21 million barrels a day of petroleum transit the Strait of Hormuz. It's right there adjacent to Iran. And even if the US is able to project overwhelming military force, they still may be able to shut that down with anti-ship missiles, pre-registered artillery, all sorts of stuff that they could impose on the Strait of Hormuz to stop the flow of that petroleum. And if that happens, the price of crude oil will probably shoot up to well over $100 a barrel in rather short order, leading to soaring prices for a number of commodities. And a Fed that is already a bit gun-shy about inflation will be hesitant to inject liquidity into markets if this plays out this way. And if they do, it means that inflation will be all the worse and will be skyrocketing. Now, another thing that could explode in the event of a war with Iran is debts and deficits. War is not cheap. It's one of the most expensive endeavors a nation can embark on. It's one of the biggest contributors to debts and deficits. Yes, Iran has suffered some major setbacks over the course of the past year, but they're still a regional force to be reckoned with. We saw how the U.S. war in Afghanistan against the Taliban went, so this is in the same general geographic region, and a war with Iran won't be a cakewalk. if we're going to have any hopes of victory, a huge number of resources is going to have to be poured into this conflict. Of course, we don't have the money. We're broke already with $36.5 trillion in debt. So where is the money for this conflict going to come from? Well, it's going to have to be borrowed. And already in the first full month of the Trump administration, that's February, according to the most recent statement from the U.S. Treasury, we saw the official deficit balloon to $307 billion just in that month, and that is with no Iran war. So in the event of a war, expect that number to explode and just go absolutely exponential. Shocking, I know, right? More debts and deficits. If you've been watching this channel for a while, you know that that's already baked into the cake, but a war with Iran will accelerate that drastically. But how about gold and silver? Let's talk about the metals, because gold and silver are already showing remarkable resilience and strength in the face of the asset correction that we have witnessed in the stock market over the past several weeks. Gold was trading over $3,000 once again today, after doing that for the first time on Friday. That was a new record all-time high in gold, the first time spot gold traded over $3,000. And in the event of a war, safe haven demand is almost certainly going to drive the metals higher. Although I do think it's important to note that there's going to be a lot of uncertainty, and that means a lot of volatility. Expect ups and downs, but ultimately the trend in both gold and silver, I believe, will be higher in the event of a war. And really, with gold rising over $3,000, a lot of investors are starting to get priced out of these markets. But one thing you can't always get, if you want to get your hands on some physical gold, even though the price of gold is soaring, even at $10,000 an ounce gold, most stackers would still be able to afford a 1/2 gold back, because this allows you to stack physical gold 1/2000th of a troy ounce at a time. So the 1/2 denomination of gold backs couldn't have come at a more opportune time. And as the gold price continues to soar, that is a product that will allow stackers to keep stacking gold. Now, me personally, I view silver probably as the better buy right now with the gold to silver ratio where it's at. But if you want to get some gold, but $3,000 is a bit steep, you can always pick up a very small amount of fractional gold in the form of goldback. So that's something to keep in mind. Now, we are seeing the spot prices of the metals increasing, and that is due to paper trading, right? Spot price is just a paper derivative of gold and silver. But I want to talk about what we might see with physical gold and silver bullion in the event of a conflict with Iran, because I believe we could see the premiums on physical bullion absolutely soaring should this conflict break out. I'm talking about the premiums on gold and silver coins, bars and rounds, not the paper derivatives, but the real metal that you can hold in your hands. And this is the stuff that right now retail investors are more or less ignoring. Premiums on physical bullion remain very low, but I think that situation could change rapidly in the event of a conflict. And one thing that Iranians are heavily invested in is cyber warfare capabilities. And in the event of a war with them, a hot war where the U.S. is in direct conflict with Iranian forces, I would not be surprised if we see U.S. infrastructure targeted, utilities, the electrical grid, and possibly the banking and financial sector. And if that happens, my forecast is that there will be a massive rush into physical gold and silver bullion. It could be a repeat of what we saw in March of 2023 when Silicon Valley Bank failed and the ensuing banking crisis drove investors into physical bullion. You saw shipping times absolutely go through the roof. Premiums on certain types of bullion exploded, almost to double the spot price in some instances with things like silver eagles. And if a war breaks out, and specifically if there are cyber attacks on the U.S. financial system, then I think we'll see a repeat of that. Certain forms of bullion like junk silver, for example, and U.S. mint gold and silver coins, like even the old pre-1933 stuff, which is super cheap right now, and the 1 ounce gold eagles and the 1 ounce buffaloes, and of course the 1 ounce silver eagles. That stuff could become the proverbial unobtainium in such an event. And if that does happen, there may even be an opportunity for stackers who already have their hands on this stuff to sell some of this stuff to the panicking masses and possibly flip some of that fiat currency into the lower premium generic silver bars and silver rounds that probably won't be in as high demand. I mean, I expect premiums in such an event to rise across the board, but if history is any guide, the premiums on things like pre-1964 90% US constitutional or junk silver coins will rise faster than some of the other products. And as I mentioned, those other US mint products will probably see the same thing. That is a strategy that is flipping the high premium bullion into lower premium stuff that served some stackers very well back in March of 2023. I don't know that I'll be doing that. It would have to be a pretty big arbitrage, a pretty big discrepancy for me to go out and sell silver at a time like that. It is something to be aware of, and it is something that stackers have done in the past to good effect to grow their stack during these times of uncertainty. And finally, another factor that could drive the prices of gold and silver higher in this conflict, and I think it's a somewhat predictable consequence if this conflict escalates on a global level, would be an acceleration of the de-dollarization trend that we have observed since 2022. Iran is allied with Russia, China, and to some extent, the BRICS nations as a whole, and an escalating conflict could incentivize those nations to dump their US dollar holdings and their US Treasury holdings and get into hard assets. Now, that probably means gold in terms of what they would be buying, and this could be both offensive and defensive in nature, as those countries would rightfully, I think, fear asset confiscation and sanctions in the event of an escalating conflict, and also more of an offensive sense, they may want to inflict economic harm on U.S. interests globally, and dumping their dollar-denominated assets and their U.S. Treasury holdings and going into gold would be one way for them to do that. So a surge of demand for physical gold globally among BRICS nations and foreign central banks could contribute to already soaring spot prices in a very significant way. And overall, I think the takeaway here is that a war is going to be bad for the economy, both the U.S. economy and the global economy. Yes, you could see both gold and silver rising in price, but even stackers will probably be worse off in general on the balance. But I do think that holding hard assets like physical gold and physical silver bullion could help to insulate stackers from the worst effects of a war with Iran. But if you like this video, make sure you check out the one that's popping up on your screen right now. Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Don't forget to like and subscribe, and I will catch you next time. Smart Silver Stacker, out.